All right, we should be live. Welcome back to another weekly live stream, a midweek stream. It's Trader XO here once again. 3rd of October 2024. The time is 1 p.m. London time, just after 12 p.m. UTC. Just give me a quick confirmation that you can hear me on the mic and you can see my screen. Morning, afternoon, evening, wherever you are in the world. I hope you're well. Wishing you a very prosperous Q4, despite some of the geopolitical shit show that's happening out there. Unfortunate to see. All right, brilliant. So, just the formalities. A special thank you to Prime XBT for sponsoring the weekly streams. As always, anything said in today's video is just my view of the market. It's more from an educational point of view, how I'm looking at the markets, what I'm looking to trade, and we'll kick off from there, okay? So a special thank you to Prime for sponsoring the stream. So in today's stream, we'll focus on just a high time frame context upon Bitcoin. And then we'll look at the trade setup on Bitcoin. We'll have some level of a glance at altcoins and what my thoughts are there. I think it's also a very interesting point. But let's just kick off. First of all, looking at the charts, yearly low, yearly high, mid-level, okay? I'm not concerned. I'm still looking to predominantly long the market. I'm looking for longs more so than shorts, okay? And looking at price here, we've had price retest at mid-level, 3 weeks of rallying, now we're getting the pullback. A couple of key things to note here is, what do you recognize on the weekly candle? I think it's looking all right. It's not looking too bad as people make it out to be. Yeah, I mean, we don't know. By the end of the day, we're still in a range-bound context. It's likely to be rotational, it's likely to be choppy. And one of the first things that I said at the start of September, or on my very first stream back, is I said, don't expect price just to V-reverse all the way back to the highs. It's going to be rotational, it's going to take time, it's going to be choppy, but you have to be very, very selective about your trades. And I also mentioned that there's something for both sides of the market, whether you're looking for shorts and whether you're looking for longs, okay? Correct. It's a flat open on the weekly, okay? We've got the tiniest of wicks, flat candle body, price sells off. Is that because of the geopolitical risk factors? We'll find out, okay? Something to bear in mind. Now, I know that there's a possibility that people talk about, Israel may retaliate and whatever. I'm sure that's going to cause some level of volatility, but I think that volatility will be short-lived. We could see a spike in energy prices. We could see a spike in dollar, but I think that is likely to be short-lived. And I think should that happen, then yes, evidently we probably will get slightly more of an extended sell-off on Bitcoin, on some cryptocurrencies. But I don't think it's going to be structurally long-term, if that makes sense, especially in Q4. So I think, again, if we do get price trading lower down, I'm looking to become somebody who wants to long the market or pick up some spot positions, okay? That's how I'm approaching the market. Now, moving forward, we'll look at the 1221. Can you all see the chart okay? I just want to make sure that everything's visible and clear. Yeah, it's good to be back. It is. So looking at the chart, we are trading in the 1221. So ideally, I want to see this hold. I don't mind if price trades below the level. What I really do not want to see is a weekly close. I don't mind a shallow close below the 12 and the 21, but as long as we can see acceptance back above, that's a good enough reason for me to continue looking for longs, okay? So I don't mind price short-term trading below the bands, but essentially I would like to see price back above the 12 and 21. So far, we've got the pullback into that level. The next level that the next indicator that I use is the 21 moving average. Again, not great. I've covered this in previous streams, but generally when you see price trade above the bands and it gets back below, it's generally some level of concern. You see that happen here back in February 2020. The bands are going sideways, price trades above it. The minute it gets back below, underside retest and price sells off. So just something to be cautious about. Just something to be very, very cautious about here is that for whatever reason, if there is market risk to the downside and Bitcoin does continue sliding lower into the September monthly open level and it retests the undersides of the bands and rejects, then there's a case that we could obviously come back into that 57, 55k demand zone. We'll have to see, okay? But just from a high time frame contextual point of view, and there's really nothing much more to add there. Is that clear? Anybody have any questions around that? So, you know, it is rotational. This isn't a trending environment, and I covered this before, that when you look at this, it's a range bound environment. So the 12 and the 25, the 21 is going to get chopped up quite a fair bit. But we don't have anything evidently clear. And I've talked about the fact that generally when you see price trade below the 1221, look at the expansion to the downside. And again, okay, every time price sells off, you get this fast expansion to the downside. This is a trending market. This is a trending market, okay? And again, trend. This, what is this? This is more rotational, range bound, okay? If we were going to have that trend down, I do believe it would have happened by now, where we would have saw continuation below the mid. So as long as we're above this key mid level, I'm still going to continue look for long opportunities in the markets. Let's move on to the trade setup. What was the key level that I talked about last week? This is a key pivotal level between 58.5 and 59.5. Price retests the level, rallies, and again, and again, and again, and again, okay? So don't be surprised if we see price push back down into this level here. Then we need to see what type of reaction we get. Now, I also want to bring your attention to something else. We've seen price really trade within this range for the best part of August and September. Right? When you identify this here as the highs, we'll just do that in blue. And then you've got this entire region here at the lows. That's all price has done. So what's with all the commotion up at 66, 65? And what's with all the impending doom and fear down at these lows? So much emotional sentiment at the extremes, yet price is just trading a range. What's the issue? This is a very well-defined range. There's some very good opportunities to trade the range, which is within a larger range of a 6-7 month range. So again, there's nothing evidently clear whether you're bearish, whether you're bullish. It doesn't really matter. There's, as I said, this is something where I longed from on stream previously. And on last week's stream, I talked about the fact that watch for price tagging or trading that liquidity zone around 65.8, 66.5. That's essentially what we did. Took out this swing high here. That was my short trigger, and I've taken profit at 62. Slightly premature in terms of taking profit. I could have held the trade for slightly low down, but it's fine. I've caught the bulk of the move down, okay? I'm now looking for longs in this region here. This is the zone that we mapped out previously in stream. Pull back, watch for the swing high, and if it gets back under, I'm going to short the market, watching for price to come back into this demand zone. Forget the noise, forget bearish or bullish or 40k. I don't even know why people are entertaining 40k or 80k when price is clearly in a range. Point number 2. point number 2 is when you look at the daily time frame, what is this level here? What is this candle? How would I refer to this? Is this or is this not a daily demand zone, the origin for which price then rallied higher? Right? So, not only is this a daily demand zone for me where price previously, in terms of previous historical context, has reacted from that level, and yet, once again, if we do happen to trade into this level, I'm looking for a reaction to add to my long. Okay, so in terms of, I'll cover what I've done in terms of the current trade that I'm running on Bitcoin. But I'm just trying to explain the context and my thought process here. Daily order block, daily demand zone, whatever you want to call it. Okay, so again, I'm looking for some form of reaction around this region here. It doesn't have to trade into here, but I'm just watching the flow, I'm watching the tape, seeing how price reacts. We could trade below the level, then get back inside. That would, for me, give me a very clear indication to go long, looking for a higher high, okay? Because is this a break-in structure? Potentially, okay? This was the swing, previous swing high. This was a higher low in context to this swing point. This could potentially be the higher high. You're looking for that higher low into another higher high. That's point number 2. Point number 3. When you take this particular swing low to the most recent swing high, where's the mid-level? 59.5. Okay? And that's what I stated on the timeline. As long as price is above 59.5, I'm looking to entertain longs. I'm not too concerned. I wasn't sure where price is going to stop. I stated between 62 to 59.5 as the zone where I'm identifying long opportunities. Now, whether you take this swing low to this swing high, or whether you take the previous swing low to this swing high here, and you deem this to be the deviation above the range high, you're still looking at that 57, 58 point K level, okay? So, again, another point of factor of confluence. That's 3 points I've given you there. The 4th point is... let's bring in the monthly open. If you look at where September's monthly open is, what level is that at? It's in that daily demand zone. So again, I'm looking for this level to essentially hold. When I say I want the level to hold, that doesn't necessarily mean I just want it to act as support and that's it. And should price trade below it for one day, it's game over. I don't mind a wick below the level and back above. That gives me a clear invalidation to get long from 59.5 to 60K, looking for price to continuation higher. So 4 points or 4 factors on confluence. Do you want me to repeat that for you, or is that clear? Now, the 5th point that I'd like to raise is when you think of price action, price tells you a story. When you look at price back in April, okay, we see a high, higher low, lower high, lower low. Immediately, the sentiment is Bitcoin bearish? Is Bitcoin distributing? Is it likely to break down and continue with market structure lower down into a trend? Well, let's run it forward. Now you've got a lower low. The minute this reclaims back above 58.5, gives you context to look for longs again. I remember trading this, okay? I think it was around about, it's on the timeline actually. I think I got in around about 57 or 50 something, 57.67. Swing, fail, takes out the stops, gets back inside. Now watch where price trades. Now what do you do? Is this a higher high? Is this a break in market structure? So the point is, contextually, when price trades within the range, you will get a significant amount of noise, okay? You can't really derive much from, oh, look, that's a lower high, that's a lower low, shit, this is bearish, I'm going to short the inside retest and look for trend continuation lower down. That's applicable when the contextual environment is a trending environment, okay? And you've only got to look at a previous example on Bitcoin, such that where you have something like this, okay? This is not essentially in the context of price, not a range. You've also got a swing fail of this level. Price breaks the structure here, shallow pullback, lower down. That's where context really takes into effect. And then you get a consolidation phase, okay? This is the key difference between trending, redistribution, and then distribution back down again, okay? So again, you get that breaking structure, underside retest. Price isn't going to mess around. Look at the trajectory to the downside. Then from January through to April, okay, higher high, higher low, higher high, higher low, higher high. Is this bullish now all of a sudden because it's broken market structure? Have you at least paid attention to the context? The context is trend down. Just because we're in a range and we're printing higher lows and higher highs, what happens? Above the highs, continuation lower down, okay? So again, when you think of price and context, this was distribution into a leg down. This was redistribution into another trend down. Equally, we have been getting higher highs and higher lows here. Just sorry, in this instance, we're getting lower highs and lower lows. Here we had higher highs and higher lows before we saw continuation lower down. Okay, so just something to bear in mind. It is a range-bound environment, just as this is a range-bound environment. So when you think of market structure and you think these are printing higher highs and higher lows, this is going to be bullish. Well, you know, I remember trading this. I remember talking about this. And I talked about the fact that if this swing fails a high, I think we see continuation lower down. So again, this has been printing lower highs, but we're still within a range-bound environment. So when it comes to market structure, on the lower time frames, yes, applicable. But when you're looking at this from a high time frame structural point of view, just respect that the fact that this is a range-bound environment. Market structure is going to be very, very choppy. What really matters is the contextual structure of the environment that we're trading in. Is that clear? So something to bear in mind. And that's why if you're picking biases between bullish or bearish, it doesn't make any sense to me. I think you just have to accept and be fluid and be flexible and look at what price is telling you. Take it from a week-to-week basis until we get a break out of this range. Price resolves in one direction or the other. We will have a significant trend, whether that's to the upside or to the downside. To me, I'm not going to take any guesses which way. All I care about is what price is showing me and how I'm going to react. That's all I care about. There's no points or prizes for me saying price is going to go to 90K, price is going to go to 40K. It's not actionable. What's actionable is what's on the chart right now. So moving forward, let me just run this forward from this point onwards. So the point I wanted to make kind of went off on a tangent there, but ultimately it's very, very simple for me. It's a point where, let me just get my levels back. I've lost all my levels. Just give me 1 second. Nope, I've lost them. All right, that's fine. Look, at the end of the day, the point I'm trying to make here is the fourth or fifth point. I can't remember which point number we were on. But when you look at when price traded this particular level here, yeah, okay. So when you look at price across the line, let me just map out the range again. There's our highs, there's our lows are identified, okay. We had a mid-range around about here. I think it was around about there. That's the range that we had. Now in terms of the key pivotal point that I talked about is around about here. Somewhere in there, right? What I want you to pay attention to in this instance is look at price where it reacted from previously. We've reacted from 66. We could pull back into that 59.5. We did that previously. That 65K level into 58s. So what if we get something similar again? And then you get that continuation high. Look at this structure here. Okay, 66 caps the highs, 57.1 caps the lows, and it goes on to continue printing another high. So you can essentially take this swing point and this key swing low here. And if you look at price action for the best part of 4 months, where has the majority of price traded? It's been within this environment here, has it not? Where you've got the extremes on either side. So again, very, very rotational environment. These changes of market structure don't mean a great deal to me until we get a significant break of the range high or the range low. So that was the fifth point that I wanted to mark out. That reaction from this level, we've seen that happen previously. We've seen price trade into that demand zone at 58, 57. Don't be surprised if we see that again. You're probably going to see significant bearish sentiment, just as we did previously. Put that to one side. Just understand what you need to see in terms of a reaction. Point number 6, let's talk about triggers and executions now. Let's bring in the RSI to play here. And let's go to the 4-hour time frame. Just mark that blue level there as our highs. Okay, and we'll just mark this as our key lows here. Okay, this is the range area that I feel price has been trading for a fair amount of time. Now, in terms of the 4-hour, what is this here? Are we getting a bullish divergence on the 4-hour RSI? It's a good candidate, right? Point number 2. Are we potentially getting, okay, if we just, let me get rid of this gray level here. Let me just remap that to focus on the current context. This daily demand zone, which, again, like I said, when you run it across the line, has been a key pivotal point. Doesn't matter if it drops deep. I want to see a reaction back above this swing point or back above 59.5. Going back onto the 4-hour chart, when you have, so I've got a question. When you have price action print one low, a second low, a third low into a daily demand zone, what can we consider that structure to be? Anybody? And you've got a candidate or potential candidate for a bullish RSI. Any guesses as to what this is? Yeah, well done, 3 drives, okay? So when you line up the confluential factors of a 3 drives pattern, just ignore all this ABC shit and the 6.618. Just ignore that. I don't really give a shit about that. For me, it's more about the structure. If we see a run of these stops into a 3 drives pattern with a bullish RSI, into a daily demand zone, into the 0.5 fib level, into a September monthly open level, I'm looking to take on that long back up higher. Now, should price trade below it, I'll just wait patiently, okay? Get back above that level, then I'll start scaling into longs, looking for higher prices. That's the trigger. Fuck open interest. Forget funding rates, CVDs. Focus on price action first, what you need to see. CVD, open interest, liquidations, that's not going to give you where you want to do business. That's just going to tell you what's happening under the surface. Okay. Same with whether you're tracking order flow or market profile. Ultimately, you need to understand what you need to see, what price is telling you, and where you want to action or look for an execution action. That's where you can start looking at the finer details of nuances, but get your price action concepts right first before you look at that. And this is why I always try to keep it very simple on streams from a fairly foundational level. Understand price action, understand the probabilities, understand what it is and the reasons why you're looking to trade or execute. Don't look at the title and think, shit, everybody's bearish. What if we go to 40K? How about you just look at what's in front of you right now and understand what's a probable scenario? What if this prints another drive lower down into bullish RSI? And again, when you look at the daily stock RSI, that's cycling at the lows now. So that's on the stock. Look at the stock RSI. So again, I've covered this in previous videos of how you can use mechanical oscillators into supply and demand zones to increase the probability of being right. The daily has rolled over. It's partially one of the reasons why I was skeptical of any continuation higher. It could have, right? I don't know, but I took the trade on simply because of the fact that I took the trade on. Why did I take the trade on? This was the reason here. Okay, so if you look at price, this was a consolidation where price traded lower down. We never really retested this zone. So there's an inefficiency here. There's an inefficiency here. We finally tagged that level. What did price do? Take out the stops or take the liquidity from here, ran these highs, filled in the inefficiency and reversed back down, okay? Filled in all of this into that daily demand zone. So for me now, at the mid-level, this is where I want to do my business. Purely price actional, not looking at order flow, not looking at footprints. I think it's probably worth looking into aggregated delta, looking for those spikes, but this is the zone where I'm looking to do business upon a reaction. Now, from an order flow footprint perspective, I want to see shorts market open into this level and get absorbed by passive bids. And if that happens and these shorts get trapped, price pushes higher, they're going to puke their positions and you will see a fast move to the upside. If sellers take control of this and buyers can't absorb the aggressive selling activity, then there could be a case that we could come further lower down into these lows, potentially into 56. At that point, I'd want to see this level get reclaimed, get back above inside, stop at the lows. There's my trigger to go along. I'm looking for price to trade back into the highs. If I'm wrong, I'm wrong. If it starts trading back below that level, I'll have to cut the position and wait, okay? And I think that kind of lays the context in terms of what I'm looking for altcoins. That altcoins are coming into significant level of support. I think price is at a very, very key level. I've talked about the 12 and the 25 EMAs. I've talked about the 21 weekly moving average. So I think this is the time to pay attention. We've got NFP tomorrow. There's geopolitical risk. And like I said, if something triggers price to go lower down into those passive bids, then great. We'll just have to wait for a reaction and then I'll look to step into the trade, okay? Now, bear in mind, it is Friday tomorrow. If we don't really see anything develop, then I'm probably going to be flat heading into the weekend and I'll pick up again over the weekend on Sunday or Monday, okay? That's kind of how I'm thinking about the market. So I'm not rushing into any significant positions in terms of Bitcoin. So I think there's a fairly decent chance we may see a reaction from this level here. I'm just watching this 4-hour stock RSI. Does this oscillate one more time to the lows and this continues printing a bullish divergence and we get that 3 drives pattern into the lows and then we get the reversal back up at least into 64, 65, okay? Back into these highs here. That's a good enough trade setup for me. Deviation, if you want to play backside, that's a deviation, trigger, trade higher. I'll be looking for execution lower down as tight as possible to get as much size on as possible, okay? What's the benefit of having all 3 indicators? Subjective. It's entirely up to you. It's just a factor of confluence for me. Nothing more, nothing other than that. You know, potential. I'm looking for signs of increasing the probability of taking a trade setup. All right, what do we want to look at next? I'm just going to spend 10 more minutes on stream. I think the first thing I'll do is look at, say, this is an example of the type of pullback that I wanted to see. Again, when you look at the 1225 EMAs, point number one, scrap everything on the chart. Just look at the bands. You've got the bull cross after months of selling. Okay, I went over the 3 trigger rule, bull, bear, bull. Where has price come into? Which zone has it come into? Where's the invalidation on this? So we're in the 12, we're trading now between the 12 and the 25 bands. Okay, point number one, we've got the pullback. Point number two is we are into this consolidation daily level, which was a consolidation before price push higher. Point number three, this is where I've been scaling into my position on say. I already have a position from 28. I'm looking for a futures position now here. If Bitcoin pushes lower down one more time, and this level, particular level holds, and it gets back above, then I'll probably start scaling in, looking for continuation higher. Just like we saw on Wormhole, just like we saw on Say, just like the example that I showed you on Kaz. Okay, so I'm looking to attack the market. I'm not being cautious. I haven't waited 6 months for price to bleed and not look for any longs. And now the first time that I have been long and we do get a pullback after what has been 28 to 52, that's nearly a 70% rally, you're going to have to expect some level of pullback, okay? That has rallied from the low point of 26 to 52, 53 cents, nearly 100% rally. So you have to expect a pullback at some point into the first significant support level, which when you look at this was the previous trading range, right? Break out of the range, pull back into the range. That's what you want to see. There's a potential candidate for a Wyckoff-like accumulation structure. This is your selling climax. This is your spring in phase B. Then you get that rounded structure in phase D, C and D. Then you get the breakout of range into phase E, which is consolidation, and then continuation back into the range high, back into a trended market. As long as this range high holds. Right, so for those of you who are familiar with Wyckoff schematics, then this should make sense to you. Just give me 1 second, please. So there you go, the Wyckoff schematic number 2, right? You've got this selling climax / your selling climax. You should be using Wyckoff with volume, but for the sake of simplicity, I'm just going to avoid showing the volume. Well, in fact, let's just bring it up. Fuck it. There's your ST spring in phase B. Selling climax, automatic rally, ST in phase B. There's your phase B, LPS, phase C into D. Okay, show of strength at this point. You want to see this range high hold, looking for that continuation high. That's what we saw on Wormhole. On Wormhole, the trigger was the upbit listing or the BitHome listing, I can't remember what, but that's what caused price to continue higher. So Wormhole was actually showing strength as Bitcoin was selling off. That's often a very good indication that alts want to continue going higher. Okay. Can you explain once more the 3 bull bear setup? Just watch the stream. Just rewatch the stream again. I want to wrap the stream up in 5 minutes. I don't want to drag this out. All right, quickly looking on to... So just using the example for, say, kind of like use this as an example, try to identify other alts. I think Ethereum is another one that I want to get back into position on. It's pulling back. It's below the 1221, so... interesting, but I need to see a level of strength here, so I'm not rushing into this just yet. I'm not rushing into this one just yet. I think if you bring on a fib, high to low, we're just below the mid-level there, so you can see I want to see a level of strength here, such that if we can find acceptance back above this 31, 32k level, then great. This is the zone that I need to see hold. Give me that. I'll look for continuation higher. If I start taking a long and we start sliding below, I'm going to have to cut the trade at this point. Okay, that's what I'm thinking there. We've made the first significant high. I'm looking for a higher low. Are we going to get a perfect 0.618 fib retracement on this? Remains to be seen. But we're close to that 0.618 level. Maybe we get the 0.705. But this is a structure that I want to see hold. Pullback, consolidation, continuation higher, okay, over the coming weeks. What happened to my old videos? I've had to pull them down. They will be republished. Give me some time. I need to go back into each and every video and update the disclaimer for legal reasons, okay? That's why I've had to pull them down. So I will be republishing those videos. Don't worry. Cubic was another one, I think. I don't hold a position in, but again, it's just trading below that trading below that 0.5 level. If it can hold, then great. I think the other look, I'll talk about the adverse scenario. Let's just assume that we do trade lower. I think one structure you have to be open-minded to is that maybe this isn't the rally which is going to send altcoins higher. Maybe we get something like this. Okay, then we get the bigger rally. The key question is this it now? Are we going to find continuation higher? Or are we just going to break lower down into an extended period of base accumulation, rounded bottom? Then we get the rally higher later into November and December, maybe post-election. So that's just something that you have to take into consideration. And should this scenario happen, look, I just don't see the point in shorting the market. I'd much rather wait for these setups, get into spot positions and look to ride price significantly higher. The time to short the market was down here. This is now a range-bound environment. Yep, if you want to take intraday trades, fine. But from a positional perspective, where you can look for those 3, 4, 5x multipliers, I'd much rather wait for those structures to develop and then look for continuation higher. Okay, let's have a look at total 2 and 3, and I'm going to wrap it up. Total 2. All right, so remember what I said on Ethereum? Anybody last week? If you watched last week's video, I talked about the fact that I don't believe Ethereum is ready for continuation higher. I think it's going to consolidate and print a 3 triple tap of the lows. If you look at the weekly EMAs or the bands that I use, I said that that's going to be capping price. This doesn't look structurally ready. We talked about this in detail on stream. If you look at the daily time frame, I talked about the fact that, look, yes, we are at the range highs, but if this loses the bands, there's a fairly decent chance we come back into this level again. And I think should this happen, should we get the triple tap setup, I don't know where that's going to be, but this is kind of what I'd be looking for, is this kind of setup. And when you think of this contextually, just have a level of appreciation that alts still could come slightly lower down into their key demand zones. Ethereum prints a triple tap of the lows, whether it's a lower low or a swing fail, I don't know. It's just, we'll just have to see what we get and how we react. But that's kind of the setup that I'm looking for. Somewhere in here, depending on Bitcoin and geopolitical risk factors, whether this is the trigger or this is the trigger, or we swing fail this low and reclaim back above it. So that gives me my entry point with the stop here. I'm looking for a 4 or 5 hour trade on this. Okay, I'm looking for the trigger point. I'm looking to react to price, then look for price going back to the highs. And again, you'll start seeing the moving averages get chopped up. We've not had that choppiness at the lows. Okay, and that's something that I've always alluded to, that you're going to see price trade above it, back below it, back above it. That's the consolidation phase. If we break below, I won't be touching it. No problems. I'll miss a short trade, but I'm not looking to piss away money trying to longer down, friends. So understand the context on Ethereum, and then if ETH BTC, it's at that key level where, again, looking at this trend line into that previous range high, it could trade lower down, but again, I'm waiting for the opportunity to start looking for longs on Ethereum, or at least looking for strength on ETH BTC to give me a reasoning to start being more aggressive on altcoins. And then when you look at total 3 or total 2, is you've got to be thinking again, is this just consolidation for the last 6 months? This isn't, you know, a big impending trend down like we've seen here. It's been a gradual slow drift to the side and lower down. So at some point, at which point is this likely to give the opportunity to start looking for longs again, okay, with conviction? That's what I'm thinking. Invalidation for me is, look, we might trade lower down, but should we get back inside this previous range, then structurally, I think that's not good. It's not good at all if that happens. So hopefully this gray zone does hold. So just something to be aware of. Let's look at the weekly. We have got the bearish crossover, but the key thing is, again, what I talked about in previous streams is that when you see expansion away from the bands, that's when you get a trending market down. We still have a level of support here. Consolidation, this could be a bear, it could flip bullish, and then we see continuation higher, okay? I'm still holding out or looking or wanting to identify that shifting context. It hasn't been confirmed. There's still some work to do on this, but we'll see what happens. Same on total 3 as well. Just above or just below the bands. So again, let's just see what we get over the coming weeks. This is the support zone. We may trade lower down, and then maybe that's the base that we need to have built before we see continuation higher. All right. Again, when you look at the stock RSI on total 3, it's at the mid. Shit, the replay chart. Okay. Yep, okay. So again, the daily is now back at the lows. I'm looking for this to reset. I'm looking for this to start basing around. Then continuation high. It's the same on ETH/USDT. It's when you look at ETH/USDT and you look at the stock RSI, again, the stock RSI is great in a range-bound environment. Very rotational, helps you with the lows, helps you with the highs. It's a good tool of confluence, okay? The highs are here, and again, oscillating at the highs. Okay, not where you want to go max risk on, not where you want to go max bearish or short. So again, if we get some level of basing here, that should tell you that there's a possibility of a good long setup here. And I think that's it. That's it for today's stream. We've been on stream for 45 minutes. I've tried to really slow this down and explain my thoughts and reasoning, how I'm looking to trade and the levels I'm looking to trade and why. And I hope that's clear. Apologies, I don't want to drag out the stream and cover a shitload of altcoins, but just understand the high level of context of price, what I've tried to tell you on Bitcoin and what that transpires to in terms of Ethereum and altcoins and total 2 and total 3, what that means for the broader crypto market. Think about the geopolitical risks. If there is continued events happening globally, then short term, I think we could see lower crypto prices, but I believe that's going to present a potential better opportunity to get into positions again, as and when. So let me just quickly bring something up. When you look at the heat maps, there is a fair amount of bids stacked between 58 and 60k. Not something that I want to short into. I would like to see forced sellers into this level, taking out the previous swing points, watching these passive orders get filled, aggressive shorts open, a spiking aggregated delta, open interest, CVD rolling over with the RSI, and then maybe that's going to be the trigger. Swing fail into that demand zone, into the September monthly open, continuation higher. And if you look at all this stacked orders in the book, just watching price hit those as opposed to being pulled. So a fair amount of liquidity resting in the books there. Want to see these hold and aggressive shorts open into these resting bids. Okay. Last point on the stream, and I mentioned this a few weeks ago, is that let's just use ENA as an example because it is a trade I'm looking to take. So if you go to trader X0 levels, and if you map out the monthly open, mark out the September monthly open. Look for a reaction from that point, okay? If it gets down there. Not every altcoin will be different. So ENA is at 23 cents. If you look at, say, let's have a look at where Say's September monthly open is. I suspect it's further away. Yeah, it's not really into play because the distance between the September monthly open and price is far, far away. So maybe Cubic is another example. Cubic, October monthly open, September monthly open, okay? Look for a possible reaction off this level, and then let's see what happens. All right. Acceptance back above October monthly open, you're likely to see continuation higher. Question, what is your standard to decide whether to ape into memes or not? For example, what is your drive to be interested in Kai? Kai, because one, the people who are behind the project, I'm backing them because, you know, I think number two, memes are the play this cycle along with AI. Number three, they've been working hard behind the scenes. They've listed on several exchanges. A lot of projects have come and rug pulled. So for me, I forgot to mention that actually. In terms of low to mid caps, Kai is one that I'm looking at. Again, when I look at this structurally, it is building that base-like structure, which for the first time, I can start talking about Kai. If you've noticed, I've very rarely tweeted about Kai because I was aware of the fact that it is in a downtrend. Just when you look at this structurally, it's been in a downtrend. For the first time in quite some time, we are seeing some positive price action, green into the band. So this, for me, is a base environment that if we get a rally into Q4, then yes, of course I'm going to look towards memes because the risk to reward profile is there, you know, versus high caps. This could potentially go back to $1.50, maybe even the highs. You know, I've shown you an example on Sui and Say and Wormhole. When price moves, you've got to remember the supply side is very, very thin. It's not going to take a great deal to send these altcoins higher if they do catch a bid. So when I look at the risk to reward on this, having scaled back into some positions around about 25, 30, I think Bitcoin Charlie literally tweeted 20 cents at 20 million market cap. I think the market cap's 40. So I do believe this could potentially, again, I'm not saying it's has to happen, but I'm prepared to take on that loss if I'm wrong. I'm not telling you guys to go out there and buy it. So, you know, some altcoins work out, others don't. I was in Roost, I remember, and it went to shit. It's just the nature of the game. So I don't really talk about meme coins very often, if I'm honest with you. I prefer to talk about meme coins that are above 60, 70, 80 million market cap, or those that, you know, I've already traded, that I've done well. So if you got in previously from 40 cents and it's gone to 180, 190, this was up at a 200 million market cap. If you haven't taken some profits, then that's on you. Nobody's telling you to hold meme coins for the next 10 years. It is literally just speculating on a bullish Q4. And if we are in a bullish Q4, then, you know, use your head. You've got to take profits at some point. Don't just wait for continuation higher. You've got to react to what price is telling you ultimately. And it's the same on Myro. I shared a setup on Myro. It's another meme coin listed on exchanges. It's looking in that base type environment. We're back at that September monthly open. You know, I'm waiting to get into position on this again from a futures perspective. Do we pull back into here and then go break this trend line that's been there since March, June, acting as resistance again? I'm waiting for the trigger to go long. Okay, at least back up into 17 cents, which I've already set out. There's my trade setup. I'm looking for a 4-hour trade, potentially a 7-hour trade. So, you know, gotta wait for the reaction. Price trading at the September monthly open, maybe it trades below it, gets back above it, above the September, above the October monthly open, then I'm looking for higher prices. So for now, I'm not in position on the futures account, but I'm looking to trade this at some point with a clear risk to reward. Back up to 17 cents in Q4, but I need the trigger. I don't have a trigger yet. I just don't have the trigger. I was hoping for this to push out of this trend line, then pull back. That gives me my trigger, but we're still capped by this resistance on the trend line. And the Stochastic RSI is at the low as well, so this is going to be interesting to watch whether this goes sideways and back up. Then gives me the trigger into the main objective, and then any extras long again up into the second objective higher up. All right, I think this will be my last stream. I will be shifting over to shorter versions, 12, 15-minute videos once a week, covering Bitcoin, Ethereum, and the total 2, total 3. So I may be streaming just once a month, but I will be adopting more shorter formats moving forwards. And I think that's it. That's it for today's stream. I'm really sorry that I can't cover all the altcoin requests in the charts, in the chat. Sorry, but I hope what I've tried to explain makes sense. Think about context. Think about price, confluence levels, what you need to see price do for a trigger. Where are you likely to be wrong on an idea? What you need to see to be invalidated on a trade. And yeah, best of luck for Q4. I hopefully you all go on to become very profitable traders and successful. So I think there's going to be some good opportunities in Q4. I think you just have to be very, very fluid in trading these markets. It is difficult to trade out there. It is very, very choppy. But hopefully with good risk management, I'm sure you all will find some level of success. So until then, until a future video or stream, I wish you all the best, and I'll catch you next week. Take care, everybody. Thank you for tuning in. Bye-bye.